The following analysis is written from the standpoint of how Warren Buffett might approach the recent announcement by American Express regarding upcoming changes to its Platinum and Business Platinum cards. This is not a direct quote, nor a statement made by Mr. Buffett himself. Rather, it is an interpretation, an attempt to analyze the implications of these changes through the principles and investment philosophy he has consistently demonstrated over decades of leadership at Berkshire Hathaway. This perspective is grounded in long-term thinking, rational evaluation of value, and a clear-eyed understanding of markets, customer behavior, and durable brand strength. In this spirit, the analysis examines the strategic, financial, and economic dimensions of American Express's decision to raise its annual fees, redesign its product, and reposition its premium offerings. What would Warren Buffett likely pay attention to? Pricing power, customer loyalty, competitive advantage, brand identity, and above all, whether the company is widening or weakening its economic moat. These are the elements that define a strong business in his view, and they form the core of the approach used here. This analysis does not seek to promote or criticize American Express's actions, but to explore their significance through the lens of value investing and business fundamentals. It will consider both the risks and the opportunities, balancing the near-term reactions of the market with the longer arc of shareholder value and business integrity. In doing so, it aims to offer not only insight into a specific decision by a respective financial institution, but also a broader lesson on how to think like a long-term investor in a world that often rewards short-term thinking. Let's begin. If you've been around long enough in the world of business, you come to realize something quite simple. The best companies in the world are those that know who they are. They don't chase fads. They don't react to short-term pressures. Instead, they operate like a well-built locomotive, moving steadily on strong rails through good times and bad. American Express, a business I've long admired, and yes, one I've invested in personally through Berkshire Hathaway, is showing us once again that it understands the nature of long-term advantage. Recently, American Express announced that changes are coming to the Platinum and Business Platinum cards. Changes in design, pricing, and the very structure of the benefits they offer. That kind of announcement might sound routine to some, but to me, it's more than just a shift in card perks. It's a clear strategic signal about how the company is thinking about its competitive moat, customer loyalty, and positioning for the next decade. Now, let's get something out of the way. I don't get excited about shiny packaging. What interests me is durable value, economic advantage that compounds over time. And when a company like AMEX raises its prices, it forces us to ask a foundational question. Is the value they provide still exceeding the cost? If the answer is yes, they've strengthened their moat. If the answer is no, then they've introduced a crack. AMEX appears to be planning a significant fee increase, possibly taking the Platinum card well north of $795 annually. For some, that number might sound outrageous. For others, it's a badge of honor. The truth, as always, lies in the details. And those details, lounge access, curated dining experiences, premium hotel perks, and exclusive event invitations, are designed to do one thing: make the cardholder feel like they belong to an elite club that they would rather not leave. This isn't the first time American Express has raised its prices. And history shows us something valuable here. In 2021, when the Platinum fee jumped from $550 to $695, there were murmurs that the value proposition had stretched too far. But cardholders stayed, usage continued, and perhaps more importantly, brand affinity deepened. Why? Because AMEX understood its customers. They didn't just raise the price, they raised the perceived value. More lounges, more perks, more of the emotional rewards that can't be easily quantified in a spreadsheet. Now, for the investor in me, and perhaps for those of you who think in economic terms, it's worth understanding what's happening at a structural level. This isn't simply about making a card more luxurious. This is about strengthening pricing power. One of the most valuable traits a business can possess is the ability to raise prices without losing customers. That kind of pricing power is rare. Coca-Cola has it, Apple has it, and yes, AMEX has it, especially among high-spending, experience-seeking customers who value trust, prestige, and curated access. But there's another side to pricing power that's worth reflecting on. You don't just raise prices because you can. You raise them because you've earned the right to. The customer has to feel that what they're receiving is not only worth it, but worth more than any alternative on the market. That's a high bar, and Amex is betting it can clear it again. Let's look closer at how they plan to do that. First, the Centurion Lounge Network. This is a clear competitive differentiator. Unlike relying on third-party providers, Amex has created its own branded space, designed, maintained, and operated to reflect its values. And when you walk into one, whether it's in Dallas, Hong Kong, or the upcoming lounges in Salt Lake City and Tokyo, you know exactly what you're getting. That kind of consistency builds trust. It also builds habit. If you've used a lounge a few times in a year, you begin to anchor your travel experience around it. And if someone took it away, you'd notice. That's customer stickiness. That's moat. Second, we see the continued development of redesign and global dining access. Now, I'm not in the restaurant business, but I do understand networks and behavioral loyalty. When Amex acquired redesign, they didn't just buy a reservation system. They bought a platform to influence how high-income individuals choose to spend their leisure time. That's leverage. It's also brand alignment. Amex is saying, we're not just with you when you pay. We're with you when you plan your best moments. And that, in my view, is the key to this entire strategy. American Express is not competing on rewards points. They're not interested in a race to the bottom with multipliers. That's not their game. Their game is psychological, emotional, experiential. They want their cardholders to feel something, to associate Amex with their most enjoyable experiences. Be a first-class lounge, a world-class restaurant, or a luxury hotel stay with a late checkout and breakfast for two. When you build your value on emotions, your customer isn't asking, what's the APR? They're asking, how will this make me feel? And feelings, when built on real substance, are far more enduring than cashback percentages. Now, let's talk about fine hotels and resorts. As someone who's reviewed thousands of businesses, I've always admired companies that focus on quality over quantity. And that's what Amex is doing here. The FHR program doesn't promise every hotel on the planet. It promises the right hotels with the right benefits for the right customers. The 4 p.m. guaranteed checkout might seem like a small perk, but for a traveler who values time, it's everything. The room upgrade, the credit, the early check-in, these aren't luxury for luxury's sake. They're functional enhancements that reinforce the message. You are valued. Add to this the access to exclusive events, concerts, sports suites, global gatherings, and you begin to see the complete picture. Amex isn't selling a credit card. They're selling a membership to a lifestyle platform. And when they raise the price of that membership, they're betting that the perceived value has risen even faster. Here's where the analysis gets interesting. For the casual observer, a fee hike might seem like a risky move in a volatile economy. But as an investor, I asked a different question. Is Amex positioning itself for the short-term applause or the long-term relationship? And from where I sit, it's clear they're playing the long game. We'll continue breaking this down in the next section. But if you're still with me here, I invite you to think about your own spending and loyalty habits. What makes a brand earn your trust? What makes you pay more and feel good about it? And do you see value in access, identity, and curated experience? Or do you prefer points on paper? Share your thoughts in the comments below. I read and value every insight shared. In the business world, success often comes down to one thing: understanding who your real customer is. Not the person making the most noise, not the person chasing the biggest rebate or cashback, but the person who aligns most closely with your long-term strategy. American Express has never catered to everyone. That's never been its model. Its success, in my view, comes from understanding the high-value customer, someone who isn't just looking to spend but looking to belong. As Amex continues to reshape the platinum and business platinum experience, that understanding remains intact. Now, let's talk about rewards multipliers. You won't hear me suggest that the platinum card is the best in terms of points accumulation. It isn't. That title likely goes to another issuer offering higher return percentages on groceries, dining, or gas. But here's what matters. Amex isn't trying to be the best at everything. They're trying to be indispensable at something. Their value doesn't come from chasing 100 categories. It comes from excelling in a few. Flights and prepaid hotels through Amex Travel earn 5 points per dollar. That's significant. But more important than the points is the behavior this drives. It funnels spending through their portal. It keeps you within the Amex ecosystem. And once you're inside that ecosystem, booking flights, reserving hotels, dining through Resay, lounging in Centurion spaces, you're less likely to look elsewhere. That's strategic stickiness. Now, some people might argue that Amex should improve its base earn rate, maybe increase the 1 point per dollar on general purchases to 2 or even 1.5. That might make the card seem more competitive in spreadsheets. But here's why I think they won't, and why I believe that's the right decision. Amex earns significant revenue from interchange fees, especially from high-spend users. By encouraging those users to concentrate their luxury spending on the Platinum Card, even if the return is only 1 point per dollar, they generate predictable, recurring revenue without having to dilute value. If they suddenly increase base earning, they would cannibalize their own margins. More importantly, they would begin to attract the wrong type of customer, one who's transactional rather than relational. Let me give you a simple analogy. If you run a steakhouse, you don't compete with a burger joint down the street by offering cheaper meat. You compete by offering a better experience, a better cut, better service, and a better evening. And if your guests leave satisfied and emotionally attached to the experience, they'll be back. They won't be comparing you to a discount coupon the next week. American Express is a steakhouse, and they've been running it that way for decades. That leads us to the concept of lifetime customer value. When Amex increases the annual fee, they're not just betting that a customer will tolerate it. They're betting that the customer will lean in, engage deeper, discover more perks, and expand their usage. Because once that happens, cancellation becomes harder. You've built your travel routine around lounge access. You've gotten used to the FHR upgrades. You've tied your dinner plans to Resay alerts. These aren't just perks anymore, they're habits. And habits, as we know, are hard to break. From a business perspective, this is a masterstroke, because acquiring new customers is expensive, but deepening relationships with existing ones, that's scalable, efficient, and far more profitable over time. And with the Platinum Refresh, Amex is reinforcing a flywheel. Higher fee, more benefits. Deeper usage, higher satisfaction, greater retention. Rinse and repeat. It's not a flashy model, but it's durable. I also want to address something that often gets overlooked in these conversations: the emotional ROI. Most cardholders will never sit down and calculate the true dollar value of their Platinum perks. They won't tally up every breakfast, every lounge visit, every reservation. What they will remember, however, is how the card made them feel. That sense of walking through a private airport lounge door with confidence. That delight when a last-minute dinner reservation suddenly becomes available. That feeling of being treated differently, better, because of a piece of metal in their wallet. These feelings don't show up in financial models, but they drive behavior. They shape brand loyalty, and they create word-of-mouth marketing that money can't buy. Now, let's not pretend there aren't risks. Amex has to deliver on its promises. If lounges are overcrowded, if Resay doesn't scale properly, if hotel perks start to feel diluted, the perception of value will slip. The moment a cardholder begins to question, is this still worth it? The whole illusion begins to fade. That's why execution matters so much. Because with great pricing power comes great responsibility. You're not just selling benefits. You're selling trust. And once trust is broken, it's nearly impossible to fully restore. So what will determine whether this Platinum Refresh is a success? It won't be the card design, though that's part of it. It won't be the annual fee number, though that will get headlines. It will be the net feeling cardholders have 6 months after the rollout. Do they feel like their lives were enhanced? Were the benefits not only real but personal? Did the card adapt to the way they live? Or did it expect them to change? In the companies I admire most, Apple, Costco, Coca-Cola, and yes, American Express, the customer is always at the center. Every decision, every adjustment, every new offer is seen through the lens of the end user, not in some abstract corporate sense, but in very real human terms. That mindset is what builds enduring loyalty. And enduring loyalty is what builds enduring profit. To Amex's credit, they're not simply adding more perks. They're evolving the platform. Lounges, racé, fine hotels and resorts, exclusive events. These are not gimmicks. They're a carefully constructed experience stack. Each piece reinforces the next. Each step deepens the brand relationship. And with this refresh, Amex is doubling down on that model. It's not for everyone, but it's not supposed to be. Before we move to the final section of this analysis, I'd encourage you to ask yourself a simple question. When you think about the brands you remain loyal to, what keeps you there? Is it price? Or is it something more? Identity, habit, emotion, experience. These are the drivers of durable loyalty. And in a world where everything is competing for our attention, the companies that win are the ones that feel most aligned with our sense of self. If you're finding this perspective valuable, don't forget to subscribe and turn on notifications. That way, you'll be first to hear the final piece of this breakdown and future insights on what makes great companies endure while others fade away. One of the things I've learned over the decades is that markets change, technologies evolve, and consumer preferences shift, but the fundamentals of a good business don't. A good business understands value. It delivers that value consistently, charges a fair price, and reinvests in the relationship with its customer. And that's exactly what we're seeing with American Express and this upcoming Platinum refresh. This is not a reactionary move. It's a calculated adjustment based on years of behavioral data, customer segmentation, and brand positioning. It's not designed to chase trends. It's designed to strengthen identity. Now let's examine the risk of misinterpretation. There will be critics who see the fee increase and jump to conclusions. They'll say Amex is greedy, that the perks aren't worth the premium, or that you can get more value from a simpler cashback card. But that misses the point entirely. Amex isn't trying to deliver the highest spreadsheet value. They're trying to deliver the highest experiential value. And there's a world of difference between the two. Value isn't just what you receive. It's how it feels when you receive it. It's the difference between a generic bottle of water and one handed to you with care inside a 5-star hotel room. Same water, different meaning. Now consider the psychology of the Platinum cardholder. They're not calculating every point. They're calculating status. Not status in a shallow sense, but in a way that affirms who they believe they are. The Platinum card becomes a symbol of control, of preference, of insight. And when a brand can offer that kind of symbolic utility, it has achieved something very rare in commerce. It has created emotional lock-in. An emotional lock-in, unlike technical lock-in, isn't about constraints. It's about alignment. The customer doesn't stay because they have to. They stay because they want to. They stay because they feel seen, understood, and catered to. That's the level of depth Amex is reaching for with this redesign. And that's why, even as the price increases, I expect retention to remain strong, because what they're really charging for is not a service, but a shared belief. There's another layer to this conversation that's worth exploring. As a company, Amex has always balanced two identities: financial institution and lifestyle brand. Most companies lean heavily into one. Amex walks the line. They're trusted with credit, but they also want to be associated with celebration, aspiration, and achievement. This balancing act is difficult, but it's what makes them uniquely defensible. When they raise fees, they're not simply squeezing customers. They're reasserting the value of the lifestyle they represent. Of course, not every customer will agree. Some will downgrade. Some will leave. That's expected. In fact, it's even healthy, because every brand needs clarity on who it serves best. If you try to serve everyone, you end up resonating with no one. Amex understands this. And by elevating their offering, they're refining their tribe. They're saying, if you value what we value, you'll find tremendous benefit here. If not, there are other cards better suited to your needs. That honesty, that confidence, is something I deeply respect in a business. Let's shift now from brand strategy to personal finance, because that's where all of this really matters. Should you, as an individual, pay $795 or more for a credit card? My answer is simple. It depends. It depends on how you live, on what you value, on how often you travel, dine out, book hotels, or attend exclusive events. It depends on whether you see benefits as transactions or as experiences. And most of all, it depends on whether the value you receive, however you define it, feels worth it to you. Too often, we make financial decisions based on other people's standards. We read comparison charts, watch influencer reviews, and try to optimize every dollar. But the truth is, real financial wisdom isn't just about saving money. It's about using money in a way that aligns with your values. For some people, that means a no-fee cashback card. For others, it means a platinum card that turns ordinary transactions into memorable experiences. Neither choice is wrong. What matters is that you choose consciously. And speaking of conscious choice, now is a good time to reflect. If you already hold a platinum card, take inventory. Are you using the lounges? Booking through fine hotels and resorts? Leveraging Resay? If the answer is yes, then this refresh is likely going to enhance your experience. If the answer is no, then perhaps this is a nudge you need to either deepen your usage or consider a better fit. Either way, you'll be acting from clarity, not impulse. If you're thinking of getting the card for the first time, consider the timing. As with previous rollouts, AMEX may offer a window where you can secure the card at the current fee before the changes take effect. That could be a great opportunity to try the experience before paying a higher premium. But again, only if the features match your lifestyle. Don't buy into hype. Buy into value, your value. Looking ahead, I believe this refresh marks the beginning of a broader shift, not just for Amex, but for the entire credit card industry. We're entering an era where cards are less about rewards and more about relationship, less about rates and more about relevance. The companies that win in this new landscape will be the ones that treat their customers not as data points, but as individuals. And the customers who win will be those who understand what they're paying for, not just in dollars, but in identity. I've said for years that I invest in companies with moat, an enduring competitive advantage that protects them from rivals. In my view, Amex's moat isn't made of points or partnerships. It's made of trust. Trust that they will deliver on their promise. Trust that they understand their customer better than anyone else. And trust that when they change, it's because they're thinking 10 years ahead, not just 10 days. If you've taken the time to follow this full breakdown, then I'd like to thank you, not just for your attention, but for your willingness to think deeper, to look beyond headlines and understand the true nature of business decisions. That kind of thinking will serve you well, whether you're choosing a credit card, building your career, or investing in your future. And if you found this perspective insightful, I'd encourage you to share it with someone who also values clarity, depth, and intelligent analysis. After all, the more we surround ourselves with thoughtful voices, the better our financial decisions become.